Good morning and welcome to the B.F. Anderson Technical Report for July the 21st. You know, a recent report came out from my friend Mike Santello with Cabot Research out of Salem, Massachusetts. Basically, the name of his report was The Great Unloved Bull Market. And basically what he's talking about is money flows. When money flows into equity mutual funds in a big way, that is a bearish signal and a signal of an overvalued market. However, since January, the report points out that $30 billion has been withdrawn from equity funds since the start of May. And in fact, despite the bull market this year, money flows have been net negative since the beginning of 2017, a clear sign investors clearly aren't anticipating further gains. He says another way to look at this is as a contrarian. You know, if you want to say, gee, I really like the stock market when everybody else likes the stock market, well, that can tend to be a problem. But what I wanted to do this morning is refresh everyone's memory about the 7.5% rule. The 7.5% rule is basically when the index, which here's the S&P 500, is more than 7.5% above the 35-week moving average. Now, this has only happened 10 times since 1980. The average gain a year later is 15.4%. So a year from this point, the average gain since 1980 has been 15.4%. But what's even more interesting is that the following year was up 21%, and pullbacks tend to be minor. So you can see here we got the signal, got about a 2% pullback, and now we're making new highs. So the 7.5% rule is certainly something to keep an eye on. Now, I wanted to show here, for illustrative purposes only, a 50-month moving average. Now, that's a long-term moving average, compared to the New York Stock Exchange Index, which is all the stocks on the New York Stock Exchange, going back to 1980. Now, you can see here that using this long-term moving average, you would have been able to easily get from point A to point B, which would be 1,000 on the Dow up to 12,000 on the Dow. But again, this is the New York Composite. But you can see how using this moving average would have kept you from over trading. Now, as you can see here, starting here, the moving average rolls over and bad things happened. It turned back up here, but then rolled over again and bad things happened. Well, if you look at the moving average now, it is definitely in an uptrend. But I think the most important takeaway from this graph is the concept of time. I mean, we're looking here at a 17-year uptrend. And so what I don't think a lot of people understand about the stock market is that once trends get established, they can last a very long time. Now, if you look at the comparison here, back here in the old days, back in the 70s, actually starting in 1966, you had a very lengthy consolidation where the market just went nowhere. Well, the same thing has happened here, and we've talked about this last week, but it just seems interesting to me that the index has turned up, the market's making new highs, things do look pretty good here. Now, also I mentioned last week about defensive assets, and here's the price of gold going back to 1998. You can see that gold, and I'm using the same 50-month moving average just to show you the comparison here. All during that difficult period that we just went through, the price of gold continued to climb. Now gold is breaking down and is clearly in a downtrend, and you can use the same old moving average concept. The moving average has rolled over, is now in a downtrend. Now, other things that I have picked up this week that I think are important. This is an index of emerging markets. I mean, we're talking, China, India, Latin America, so forth. This index has really shown that there is a major breakout in the emerging markets, which tells me that the world economy is picking up. The other interesting factoid that I thought was interesting last week was the fact that the Russell 2000, which is the small cap stocks, broke out finally after a lengthy consolidation, but we have made an all-time new high on the Russell 2000. Now I want to get into the watch list. Again, Alibaba continues to make the watch list. Again, this is one of the emerging market stocks. This is China, the Amazon of China. Very strong uptrend. Moving averages are moving up. Stock made an all-time new high. Now realize here, this Amazon is clearly e-commerce. Anything to do with e-commerce seems to be the way to go. Now, again, on the list, another repeat is NVIDIA, which is a hardware manufacturer of mainly artificial intelligence type technologies. Looks good. Just doesn't seem to be any stopping it. It's been a real strong one. Now here's a new stock on the list, and I must disclose that we do own this stock. This is a company called Universal Display, symbol OLED, which stands for Organic Light Emitting Diodes. This company has a breakthrough technology, and I really would encourage you to go to YouTube and just type in OLED. There's plenty of videos on this. It is an amazing technology. It's where they're making displays, whether displays for computers, cell phones, automobiles, anything that requires a display. These displays are so thin, almost as thin as paper. And they're bendable, they're making them out of plastics and so forth. This is a breakthrough technology. However, I will note this is a risky situation because we don't know what's going to happen with the technology. But supposedly the rumor is Apple will incorporate OLED in the new phone coming out in September. Again, we're starting to see biotechnology continue to make the list. And we did add a biotech stock to our portfolio this week. The group is very strong. This is Puma Biotechnology. Then I'm going to mention real quickly here Vertex Pharmaceuticals, which is another biotechnology. Look at that gap up. They came out with a breakthrough drug for cystic fibrosis. Now, the thing about biotechnology you have to realize is that you live by the sword, you die by the sword. These stocks are very volatile and can be quite risky. This stock jumped roughly 24% in one day. Well, they can drop 20% in one day. But that's it. Have a good weekend, and if you have any questions, let me know.